Good morning. It's Saturday. I've got an update. Let's call it the weekend update. Grab your coffee. Let's go. Thanks for watching the backyard edition of the weekend update. I've got 5 things that I think are going to help you. As always, links down below if you're a subscriber to the weekend update email, and on YouTube. We'll try and drop links throughout the week, separate these videos so you make sure you don't miss them. Number 1, what does the Fed say? When the Fed makes comments or when they release their meetings, it's always a big deal, even if they don't make big moves. News down below in the link, the Fed has projected 2 rate cuts for 2025. In months past, or last year, we had hoped for as many as 5 rate cuts, but inflation proves to still be sticky, and there's a new form of inflation that we expect in early stages of this new administration and fairly early stages in the year, being that we're still in first quarter, and that is tariffs. More on that in the next update section. But if you want to read the Fed commentary, go ahead and click the link down below. One lever that the Fed is expected to pull, and they commented on it, is the slowing of their quantitative tightening. Quantitative tightening is the exact opposite of easing, which is what we saw post-Great Recession and during COVID, when interest rates, Fed funds rates went to 0, rates cratered, and money got almost free. Well, we've been doing the opposite of that to help combat inflation, and the Fed is saying now they're going to slow the runoff of their books, which should help interest rates come down. Most of the reports you'll see are that interest rates reached near multi-month lows this week after opening up slightly higher the day of the Fed meeting in anticipation. Okay, so the second story I have for you in the update this weekend is this inflation related to tariffs. Much different than the inflation that we saw, and also called transitory during COVID, that was related to supply grid lockup, supply chain lockup, and we've seen a lot of that inflation subside, but there has been some stickiness to it, which is why we're not looking at 4 rate cuts this year. Instead, we're projected for 2. As it relates to inflation and the cost of mostly goods, also services, how does that impact the housing market? Well, some good news on the existing home sales front for February 2025. You'd have to go back a full year to get numbers close to what we saw. I think the number is 4.26 million existing homes sold. That's the report that came out for February. You'd have to go back to February 2024 to get close to that at 4.38 million. So, second highest number we've seen in a year's time for existing home sales. Why is that important? Well, if these tariffs are going to put pressure on builder costs, we're going to see as much as, and this comes from the builder industry itself, a 20% increase in new home prices due to the cost of goods to build said home. So if you are a homeowner currently and you are going to be selling your home today, fortunately, you're not battling with the cost of building that home today because it's not brand new. The competition, however, are dealing with massive increases on prices of labor and construction materials to build said home. So if you're a listing agent, talk about the advantages this presents to your clients that have an existing home sale to put on the market. You're beating the competition right now simply because you're not building the house today. Okay, so number 3 on the list, we just talked about transitory. I want to talk about migratory, and this is really for your feedback. I'm interested in your thoughts and or ideas about the announcement that Rocket Mortgage is acquiring Redfin via a stock purchase. This is a huge acquisition, and I think if you're an agent that's been in the market for several years and predated Redfin, you've seen Redfin come in, offer some semblance of a discount brokerage with credits back to buyers, lower cost listings, and there's no doubt that Redfin has its place in a market. I've worked with several Redfin agents that were terrific, but there is saying the quiet part out loud is that company is known as a somewhat discount brokerage. You can call it streamlined, efficient, whatever you want to call it. The reality now is that you have one of the largest lenders, if not the largest lender in the country, acquiring a real estate firm. I'm curious to how that is going to impact your mindset, as we've dealt with companies like Zillow, with mortgage companies in the past. If you've been working with a broker that sent loans to Rocket Mortgage, is there a question of whether or not that person now will go with a Redfin agent that they are merging as companies, or factually Rocket's buying Redfin? So interesting take, a big move. Probably their goal is to transform real estate as we know it, and I think we've all known that brokerages come on with an intention to do that. Compass was no different, just did it differently. So I'm interested about your take. Rocket Mortgage buying Redfin, should that have any impact on clients migrating the business you've done with them over to Redfin? Finally, guys, it's about the product spotlight. Number 4 on the list is a revisit of numbers from a real scenario that I did this week for someone looking at a mortgage that was not your traditional 30-year fixed or ARM, and most importantly, not fixed in the way the interest is charged and collected. It's called the all-in-one. I've put a few examples down below to show you ways that clients can lower their carrying costs on their mortgage, generally their biggest expense, without really changing their habits in the way they make their payments. In addition, having access to the equity of their home, fully liquid, all the time. I've been doing loans for 20 years. This product is unlike anything else out there. But if clients don't know about it or see the potential savings, then down below you'll see that the effective rate on this particular scenario with our all-in-one mortgage is less than 3%. Guys, people are waiting on the sidelines for the cost of their mortgage to go down. The solution is already there for them. They just need to know more about it and understand the elements that will benefit them to take action now, whether that's getting into the market or selling a current home and purchasing another one. The all-in-one mortgage is like nothing else, and it does some really cool things that will make people comfortable with getting in the market, becoming active, selling or buying today. If you want more information about it, message me, DM me, email me, call or text me. The all-in-one mortgage. It's the product spotlight for this week. Hope you have a wonderful week, and I will see you next time.